Hello, this is the second part. The first 15 minutes was all silver within first mining cost, and then multiple time frames and some statistics as well. This video will be gold, platinum, and palladium, but not in that order. Okay, so within the daily chart for gold, obviously, the biggest thing that can grab your attention seems to be that large down move that occurred, and since then it has pretty much went sideways. You would have expected, after making this lower low, to make a lower high below here. That was almost a no-brainer. And when that happens, now you don't got the no-brainers anymore. It's not a no-brainer that it's going to make a lower low, and it's not a no-brainer that it's not going to make a higher high above the last one. It did make a higher low. A lot of people say when you're in a bear market, well, it's going to make lower lows. And it still may. But now that it's went to this low, and it's had some rallies along the way, well, it's either going to A, make a lower high, or make a higher high. Right now it's here, which is significantly lower, but we don't know where it's going to play out yet. Same thing with the lows. Is it going to make a higher low or a lower low? If it makes lower highs, which is very common these days, say it comes up to here, and then it comes down here, makes a higher low, and you'll be talking about a symmetrical triangle. I'm not saying that's going to be the case, but definitely something that might be playing into it as well. So as far as Fibonacci retracement's concerned, 1796, the last key high, 1321.8 is the low that I've got, which means the 38.2% was a perfect hit. Support, perfect as well. You test it a second time, not a surprise you break it below and have a fast move, which of course, like I said, made a higher low. And now it's resisting this area again. So definitely a lot of indecision on the short term, but pretty much it's going to move up when silver goes up together. At least it easily should be doing that. Anyway, let's now go to the monthly chart for gold. Really not much to go over. Same thing as in silver. Now we have a situation where we were well above it, went sideways, and now it's breaking down. This is the very first time that it has spent the close, or the highest level below this area here. Because when we went through all of this, every single time it stayed within the band. In fact, this is over the last 4 periods or so, is the only times it has stayed below the 18 average of closes. Well, the exception of in here. But for the most part, it's totally changing. Now the question is this going to be the failed breakdown or the start of a bear market? I'll ask yourself that. But if we do have another leg lower, I'm looking at the high 1100s, low 1200s to be support. As far as the yearly chart is concerned, a lot different than silver, although this is total price fixing at its finest. If you want to know why this happened, I've put up a video, I think, history of gold, put my name in, and this mountain, it should come up. Or do the research. Why did gold stay at $20, and what made it go from 20 to 35? If you do the right searches, you'll find the reasons why. So that is the gold charts. Now let's take a look at the palladium charts. And this is a wild chart, to say the least. You break this resistance, and within the 18 average, it was riding a bull market nicely, consolidating in here, and there's your classic breakout, finding support within the band, but it didn't hold. Therefore, your classic failed breakout, very quickly having a fast move in the opposite direction. Within the 18 average band, it pretty much fell pretty fast. And what happened here? Didn't really consolidate there. It just kept going higher, like that band wasn't even there. Oh yeah, that's what we call a classic failed breakdown. because we were in a rising average. You broke below it, didn't stay that long below it, and you didn't go sideways, you went up. That's a failed breakdown. And it had a fast move in the opposite direction. Since that time frame has occurred, it has went sideways. Plain and simple. Within the 18 average, it has had a little bit of a lower step here, but really it's sideways for the most part. Markets can correct either through price or through time. But when you have a situation, you have moves, you're going to have a bull move, then a bear move, then a bull move, then a bear move. But sometimes you can have bull, sideways, and then from this it can be bull again, or it can be bear. So there's bull, sideways. What happens after sideways? Either bull or bear. Now, when we adjust the settings, we can take a look at it from this high and this low, which is what we're going to do, and that would be the 7-day chart, each period representing 7 days worth of trading. You got this key high, you got this key low. It has not taken out either one since then. The Fibonacci retracement, we have 61.8 and 76.4%. So for this selling to be a failed move, it needs to hold and stay above here for a decent amount of time, which it has done well at. But again, you resist this, come down, you resist it again here, not as much of a pullback, break it, support it. And there's another possible failed breakdown, possible failed breakout. So we'll be saying that this is that move. Well, time will only tell, but again, you can look at this and say, okay, we make a lower high in here, go down here. Even if we make a higher low, create a symmetrical, it can go either way and maybe break down, maybe. But again, it's doing much better than silver has been doing. And when you've had this test before, it has a pullback with a higher low from, we'll say in here. Now you come back here, you want a higher low from this one. Boom, and then you break it. And if you don't have a higher low, which means you just go above it, well, now you're going to be saying two things, or three. One, failed breakout. Two, move up to this level. Who cares if it's going to pull back? Or three, this level to be support with a price objective later on to go to this high. And the final one now will be Palladium. We're only going to do one time frame. We're going to do the monthly chart within it. It's the only one of the very few things, crude oil being another one as well, that is not above its late 2000 highs. The Dow's above it. All the indices are, gold, silver have gotten above it, but not platinum. It's a wild move though. When you go from 2,300 to 750, it's fairly wild. And fast down, fast up. And then since just like Palladium, just doing a lot of sideways action, but it's not looking as nice as Palladium is within its correction. You've got these lower highs pretty much, but really only one. You got this, there's a lower high, but two matching highs from that point. So it's really in a rage-bound market for the last few years of 1,400 to 1,700. But really, it's been a rage-bound market for about 4 years, but the resistance a little bit higher. Okay, thank you for tuning in to this video, and have yourself a great week. Bye-bye.